Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra.
It's known as white gold, and it has been declared essential to national security. Joining me to discuss one of the top commodities of 2021 is the CEO of Lithium Americas, Jonathan Evans. Good to have you with us.
Thanks. Nice to be here. Thank you.
All right, Jonathan, let's start off with a big macro overview of lithium. Demand globally expected to grow 4,000% by 2040.
Right.
And as I mentioned, it's been declared as national to U.S. security and essential to U.S. economic security by the NSA. Why is lithium so vital?
It's the motive force in all the mobile devices that we have, increasingly in the vehicles which are moving to electrification, even in stationary storage batteries for renewable energy. So without lithium, these batteries don't work. It's the chemistry that has the highest energy density. It's the lightest for weight and energy density as well. So it's kind of irreplaceable.
Give me a sense of exactly how prevalent lithium is in terms of our day-to-day use.
Every day, like this interview right now is powered by lithium-ion batteries. These lights, your phones, our computers, power tools, it's ubiquitous in everything we do.
And yet it's so surprising that 80% of the world's lithium supply is controlled by China, and that only recently it's been decreed as essential to national security and to the health of the national economy to have more American control over the lithium supply chain. And that's where you guys fit in. So tell me about that.
We have a very large deposit in North America, the largest known deposit in North America, which can play a key role in helping to establish a North American-based supply chain, mainly for electric vehicles, as those batteries are much larger than anything that we're, of course, carrying around or using on our laptops, and to follow the investment that's been committed already by major automotive companies like Ford, General Motors, and the battery companies that supply them, for a supply chain in the U.S. that today, for batteries, is about 40,000 tons per year, which is going to go to excess of 400,000 tons per year by 2030. So imagine the entire world supply today needs to be replicated just for use in North America in less than 10 years.
Well, how do you do that? How does that supply gap get made up so quickly?
It's very challenging. These projects can take anywhere from 10 years if they're greenfield projects, and it's going to require a lot of greenfield projects, to brownfield project expansions. They're generally at least 3 years and they're quite expensive. The biggest deposits in the world have a limit on expansion. You really need more supply. I hate to say the word oil and gas, but as the world population has grown, we went from $10 a barrel in Saudi Arabia, where now we're drilling in the Gulf of Mexico and to drill in Siberia and so forth. It has to follow that tenor for us to be able to keep up.
And we're seeing a similar pattern in terms of the commodity price of lithium having such a dramatic appreciation, up 300% in 2021.
Yeah. You're right.
So do you foresee that rally continuing? How much room is there left to run in terms of the price of lithium as the base commodity?
So pricing, when you look at pricing, a lot of times people are very focused on spot pricing in China, which represents sort of the tip of the iceberg. It's 10% of the market or so, but it's a leading indicator of where price is going. You have to kind of dig into public company results to kind of average where things are. And they've certainly come up quite a bit, and they will come up more, where the price of lithium will never be in the range it was a few years ago. It's actually needed, though, because the question you asked me earlier, how do you get there? It requires a lot of investment.
Right.
And that's the thing that's lacked in this industry for more than a decade.
But stands to reason that with commodity prices for lithium being so high that it's going to create more players entering the space. What does that mean then in terms of the demand supply curve?
I think that's the only way you're actually going to be able to get things back in balance over time, over the next decade. You will need more players. You will have more consolidation in this industry, consolidation by larger companies that bring things to bear, like some of the companies at this conference, large mining companies that can do multiple multi-billion-dollar projects simultaneously, oil and gas, chemical companies, because they bring a lot of things to the table that the current players don't have today.
Are we already seeing a number of new entrants into the space?
I mean, the recent is Rio Tinto. Which I think is welcome, in that there's so much demand right now that it's not a threat. A decade ago, I was in this industry 2008, 2013, yeah, one or two people coming in could sort of upset the balance of the oligopoly, as it was called. It's not that way anymore. There's plenty of demand to go around. And in fact, you need it. Part of it, too, is to control price, which might be anathema for me to say that as a producer, but the pricing that I think you're going to see is going to be above $20,000 a ton. Now you're finally at a place that you can get sufficient capital returns to risk that capital, put it in the ground in order to deliver to the customers at the end of the day.
So what is your price outlook for lithium, the commodity, by the end of 2022?
So I'm going to ignore the spot pricing,
Okay.
but if you dig into company results, you'll start to see where contract pricing is going. And some of the public companies are already showing $20,000 to $30,000 a ton, which I think it's in that range. And I think it's going to stay in that range for quite some time.
Do you see the geopolitical dynamics with the war in Eastern Europe, Russia's invasion of Ukraine, impacting that? What impact does that have on the lithium market and on your business specifically?
I think it impacted the energy market. So by virtue, it's impacting adoption here. As oil has gone up, gas prices have gone up. You can see that here in the U.S. I think oil's over $100 a barrel. So there's a drive and a push to move to electrification. I think it also drives that whole concept around regionalization, where North America, say, or Europe has control over its own supply chain, where you don't have these far-flung, like Europe getting gas from Siberia.
So let's look at that, the geographic distribution and the control of the supply chain. As we mentioned, 80% of it is in China. What are some of the other areas around the globe that have the prevalence of a lithium distribution?
So 80% of the processing is done in China. It's probably a little bit more, actually. So a lot of the lithium comes from Australia in a mineral form called spodumene, and it's processed in China to a final form that can actually be used in batteries. In fact, many of the cathodes are made in China as well. It's all integrated. Australia is half to 60%, followed by Chile. Argentina is quite far behind. And then beyond that, China has some of its own resources that are, frankly, not that great a quality in Western China. Lithium's not rare. It's just never really been developed. There's other resources in the U.S., Canada, and actually in South America that could be pressed into service.
Batteries are not new. So,
No.
So why has it never been developed up until now? Why are we suddenly catching a wake up that we should be in charge of our own supply and seeing that it's been controlled disproportionately by China? Why is this moment of reckoning only happening now?
Part of it is the first question you asked me, how prevalent is in our daily life, where now you would probably be more afraid if you lost your cell phone than your wallet. So everybody is on the go, and everything is mobile, everything is portable. In addition to what's really changed now is the market, and the consumers have really moved and started to embrace electric vehicles. Those batteries are huge. So your laptop computer has, well, the old computer's 4 18650 batteries in it. I know the geometry's changed some. And a Tesla, you have 4,000.
Right.
So
but electric vehicles, laptops, cell phones, they've been around for at least a decade. I was afraid of losing my cell phone at least a decade ago.
Yeah.
So, but it seems like the catch-up moment is only really happening now, at least if you look at it as indicated by the spot price of lithium.
Underinvestment with the, I think the electrical vehicle uptake has been much faster than people expected. First in China, now Europe is actually outpacing China, and surprisingly, you're seeing the U.S. These vehicles like the F-150 come out and they're sold out. You have a year waiting list for them. So again, it's all combined with underinvestment that's occurred for a decade or more to conspire to put us in this position now.
So as an investor, if one wants to take advantage of this trend, what's the play?
But I would say lithium. Well, and I say that on purpose because I was in CNBC. I got asked this question. You have a market cap of $3.5 billion, and you haven't sold 1 ton of lithium yet. My retort was, well, Lucid, Rivian, they haven't sold any vehicles yet either. My market cap might be $3.5 billion. I think at that point, Lucid was something like $40 billion. And the day that we get into production at the end of this year, we're sold out.
Okay.
All of our assets are sold out versus an electric vehicle, which is, to be honest, there's a lot of consumer preference on that, and the moat is a lot smaller.
Well, let's focus a little bit about some of the developments at Lithium Americas, because you recently announced that you're exploring potentially separating your US and Argentinian operations by creating an independent public company focused on the Thacker Pass lithium project in Nevada. So firstly, tell us about the Thacker Pass project in Nevada.
So Thacker Pass is the largest known lithium resource in North America. If you stacked it up sort of on a comparable basis for spodumene, which is your largest lithium source, it would be second or third in the world. So quite large, right here in North America. The development of that has taken 13 years to get us to this point where we've done all the background work, the geology, all the environmental studies, all the way through federal permitting and now state permitting to get us to a point where post-appeal this summer, we're shovel ready. We're starting to line up financing sources via strategic partnerships, but also leveraging the Department of Energy, which has a very active loan program office now, which offers basically debt up to 50 to 60% of the capital cost of the project at fixed treasury rates for up to 25 years.
Well, let me just focus a little bit on some of the legal issues there, because in line with this notion that we need lithium for national security, the Thacker Pass project was approved by the Trump administration, but now I understand it's being appealed by some indigenous groups and it hasn't quite been approved yet. It's pending a decision by a federal court. What's the legal status there?
So the federal permit has been issued, actually, and that was appealed. It was actually appealed mainly by two local NGOs, and the appeal by the indigenous group, which funny enough, don't live anywhere around the project at all, was around accusations that we didn't do work that was required under the NEPA process for consultation, but also that somehow it was a massacre site. That's all been exposed in federal court through 4 injunction attempts and thrown out. So the case there is very, very weak. In addition, the very first injunction attempt was based on environmental grounds, and that was thrown out the same day. So we feel very, very strong, and that I think you're going to get this, and you're seeing this now where the press is looking at anywhere there's controversy, Serbia, the US, even in Latin America, SQM, around water usage and so forth. And that the next question you'll ask me is, what have we done around ESG sustainability for that project? Which
quite my next question, but that one is coming up because ESG is clearly an issue that
absolutely very important.
A lot of conversations, but you're expecting the Thacker Pass legal situation to be resolved by when?
In the summer.
And what is the advantage then? Or what's the strategy behind spinning it off into a separate U.S. company?
So if you look at, first off, customers that are interested in that. So we have a broad geography. I have assets in South America, which I've worked in and out of South America for more than 15 years. So I have a very high comfort level, and so does my team. A lot of the OEMs and companies in this space don't. Latin America has emerging market risk. They're scared of what they see in Chile and Bolivia and so forth, and don't really want exposure to inflation, currency issues, and so forth. They're very focused on a North American supply chain. The other piece over this is if you overlay national security partners. I have a Ganfeng partner in China who owns 51% of the project that the first one that we have, first resource that we have in Argentina. They can't participate in any way in the asset in the US. So if you look at the United States, Canada, Australia now, it's prohibited now for Chinese companies to actually purchase assets because they're all under the critical mineral regime. By splitting the company up, it allows strategic optionality for both resources, where the biggest investment destination right now for lithium outside of really what you're seeing in Australia, even the US now, is Argentina.
Okay.
BYD, CATL, CMOC, all these companies are located there. Some of them are, Ganfeng's been a great partner, but that doesn't quite jive with the other vision around national security and ensuring where this material goes. So it's a bit of a tale of two cities, where in the US, Thacker Pass is actually could be a cornerstone asset for a business that can follow another regional strategy here, because there's actually more resources in the US and several in Canada that can be developed by the team here. Both teams are separate and distinct. They don't overlap in terms of technology. So it's an opportunity for not only for value to be unlocked, but also for those teams to be much more focused on their regions and actually hopefully accelerate growth to deliver product to market, because that's really what the problem is at the end of the day.
Well, given that, as you mentioned, a partnership with a Chinese company may negate the whole argument for national security, how is that viewed by shareholders on an institutional level? Is that something that they care about?
From an institutional level, no. I mean, Tesla is 5% owned by Tencent, right? So as long as the company performs, and I think companies like those, it doesn't really matter where they sell their cars or Apple sells their iPhones. They're more consumer products. It's what goes in. Those batteries aren't only used in cars, they're used in weapons and everything else. So that's where the government's view is, because they look at more holistically about economic growth, national security, and so forth. So you can kind of look at MP Materials, how they've grown now, and it's a very U.S.-based asset. And their focus is really on capital deployment in the U.S.
Right.
And it would be the same here. In it, as I mentioned, so it's potential investors and I think the government, which geopolitics, unfortunately or fortunately, is a big part of this business now.
Well, Jonathan, speaking of Tesla, have you had any direct conversations with the likes of Tesla, Ford, other big electric vehicles manufacturers to source their lithium directly from you?
We've had several discussions with the likes of people like that. So all under NDA.
All under NDA.
Right. So the strategic partnering process has started for Thacker Pass. That, as it's moving through its final engineering, we filed our application with the Department of Energy for a loan. We'll be commissioning a demonstration plant as we put a very large tech development center in place in April. And as we move through the appeal this summer, by the end of the year, the focus is on being shovel ready, being fully financed. The loan process for the government takes about 6 to 9 months, but the rest of the year, having all this wrapped up.
And you have supplier agreements ready to go.
That's part of those discussions. And we've left ourselves open in that as part of those discussions, people are looking for potentially investment to take material off at cost. That means equity investment. So lucky for us, our balance sheet is very strong. We took advantage of the market, so we have about $500 million on the balance sheet. So we've kept our options open and haven't committed offtake. I didn't need it for stock price appreciation, which you might ask me at the end. No, we earned our cash to be able to let us do our work without having to do anything for promotional reasons.
So if all goes well, and taking aside all of the geopolitical madness in the world for a second, if according to your plans things get approved in September, as they should at the end of the summer, you anticipate a big pop in your stock, I would think.
I would assume so, yeah. I'll leave that for the investment community to look at. So,
all right.
I would think so, though, yes.
So September could be a critical point in the timeline of...
For Thacker Pass, and I think the other for us, too, is our advancement in Caucharí. Caucharí construction will tie up late this summer. We'll go through commissioning, and we should be starting production before the end of the year.
Let's talk a little bit about your stock price, because it has done phenomenally well. 2 years ago at what, $2.66, right. Now trading around $28.
Yes, US,
something like that. So we've had a tremendous return, over 10x return by my math.
Right.
Is this all linked to the fact that we've had such a run up in lithium, the base commodity?
Yes, and I think if you look at other companies in our space, they've had sort of a similar run up, especially if they're at earlier stages. Even the majors have had significant appreciation in their stock from COVID times. As pricing has gone up, as this picture has come out that we have a real shortage and we're going to be very short for a long period of time, I think now, actually, at the end of the day, what's really endorsed that is what the government said. There's a real realization now that we have an issue.
Well, as an investor, do you anticipate looking into this share, thinking it's already had a 10x return? Why should an investor get in now, or has most of the upside already baked in? Make the case for tremendous appreciation still in the future.
Well, it depends what you think is going to do with pricing. That's number one. So that asset in Argentina is going to have a tremendous profitability next year. Remember, our long-term view on pricing for lithium was $12,000 a ton for both projects just a few years ago, which now, like I said, spot prices is 50, but let's assume it's
so you've
20 to 30,000
on 12.
Yes.
And it's now at 50.
Yes.
Well, that's a lot in itself. But yet, Jonathan, your stock is off its all-time high.
It is.
I think all-time high was, what, $34?
34 or 38, something like that.
So why have you seen that slight drop?
I think we trade with the EV companies. as the whims of Tesla and everything else were sort of, and I think there might be if you had asked me where I would invest in the supply chain, it would be around materials, critical materials for this, whether it be lithium, people that have technology around cathodes, solid state. There's a tremendous amount of growth in these. And if they're adopted, so lithium's needed no matter what. Like I said, the moat is pretty long and pretty wide versus say a vehicle.
One of the challenges that you touched on briefly with the ESG and the indigenous groups protesting some of these production facilities, as well as the notion that lithium requires an inordinate amount of water to mine and process. Break those down for us. What are some of the biggest ESG concerns that you're facing?
So look, for at least Thacker Pass, I'll use it as an example. From the very beginning, we actually cited the project. We did a survey of the quality of the habitat, put it in very low quality habitat in the pass, in Thacker Pass in the valley. Our water utilization is low, even compared to a brine project, if you don't count even the brine that's pumped. Because there's fresh water that's needed for those projects beyond that, and much, much less than spodumene. We generate more than half of our own power as a byproduct of the reagent plant, and the rest of the power we use actually comes from either hydro or from geothermal power nearby. And then the air emissions that we use, air emission technology is best in class. It's analogous to a pickup truck idling, for a facility of this size. So that coupled with, that's the E part. The S part's extremely important in that the benefits have to accrue to the community that they're in. The communities that we're in are either very rural in a lot of cases, or they're economically depressed, whether that be in Latin America or here. Skills mapping, jobs training, co-investments or investments in facilities to make the community such that people want to live there, and you can have multi-generational support those employment opportunities, and people can move there and their quality of life goes up. Schools, daycare centers, these are things that aren't normally talked about with projects like this, but they become key, and they've always been part of the discussions that we've had with our neighbors.
Okay, just to play devil's advocate here, Jonathan, technology has been changing rapidly. Do you foresee a scenario where the battery technology develops, becomes more efficient, and lithium is no longer such a vital ingredient here?
Solid state batteries, but that's and ideally would be a solid lithium anode. So it's the periodic table. It's where it is in terms of its reactivity. It's very difficult. We've talked about sodium, which is further down the alkali metals list, but the problem is that batteries there are too big and too heavy to use in cars or carry around in your pocket. So for mobile applications, or where weight to energy ratio, lithium just fits Mother Nature. So
lithium is there because of Mother Nature.
Yeah.
I should have paid more attention to my physics and science classes when we did the periodic table. All right, Jonathan, thank you so much for breaking this all down for me. Really appreciate it. Thank you for joining us here on Kitco News.
It's my pleasure. Thanks.
Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra,